Welcome back, students, for the 12th session. This is the second session on security analysis. So, in the previous session, we have discussed about the introduction to security analysis. In that, we are dealing with fundamental analysis, that is economic analysis. Means here we have started with analysis of variable income securities. The analysis of variable income securities is done in two broad categories. One is fundamental analysis, the second one is technical analysis. So in fundamental analysis, we have three categories. The first one is economic analysis, industry analysis, and the company analysis. So here in this session, we will be dealing with the economic analysis. So let us just go for the previous class recap. Analysis of variable income securities. I have given a brief introduction. What is analysis of variable income securities and how it is being done. The different stages of analysis of variable income securities. What are the learning objectives of this chapter? The learning objective of the chapter will be common for all the sessions relating to this chapter. So this chapter aims to provide an overview of securities analysis. What are the session outcomes? At the end of this session, the students will be able to understand the meaning of fundamental analysis, know the macroeconomic variables affecting the stock values. As we are dealing with economic analysis here, so you will understand about the macroeconomic variables which will have an impact on the stock value. So let us go for the fundamental analysis. I'll just go a bit detail into it. As I've told you in a previous class, it is a systematic approach for estimating the future dividends and share prices. What an investor is expected to gain from the share prices and what earnings he is going to earn, what is the capital formation he is going to have, all that will be analyzed in fundamental analysis. So here we try to examine the different factors, variables or forces that affect the well-being of the economy, the industry and the company. As I told you, it is studied in three layers. Fundamental analysis is studied in three layers, that is economy, industry and company. So as the name itself indicates, fundamental analysis. Analysis is nothing but an examination or an investigation into a certain aspect. So when I say fundamental, it is nothing but primary or principal or which is on which something is based upon. So this is the basic analysis what we are going to do. So here what we do is we try to drive a forecast and profit from the future price movements. So what happens to the share prices over a period of time, that we are going to study here. So here to forecast the future stock prices, we use fundamental analysis. It tries to combine economic, industry and company analysis to drive a stock's current fair value and forecast future value. So the basic reason is where we have to invest, how we have to invest and what is the extent of investment which can be made. So this analysis helps the investors to do that. So the next one, let us look into. We have the objectives of fundamental analysis. Why is it done? It is done to conduct a company's stock valuation and predict its probable price evolution. So first one is we want to do the valuation of the stock of a particular company and what is going to happen in the future for its value, that they are going to predict. Future is actually uncertain. It may or may not happen, but still we try to predict, we try to estimate, we try to guess and invest based on that predictions. To make a projection on its business performance, so we try to analyze the performance of the business, what is going to happen with the business, and then we will be investing in that particular organization. To evaluate its management and make internal business decisions. So here they try to evaluate the management of the company and they try to make the internal business decisions about investment, and they also do it for the calculation of its risk. What is the risk, extent of risk involved when they go for investing in that particular organization or company. What are the uses or applications of fundamental analysis? Here we have It is used to evaluate a lot of information about the past performance and the expected future performance of the company, industry and the economy, as it is done in 3 layers: economy, industry and company. So it is used to analyze or estimate the expected past performance. What is the expected future performance? It is performed on historical and present data, but with the goal of making financial forecasts. So basically it is performed in order to know the based on the historical and present data. So we consider the past and the present and predict the future based on that. The next one is it attempts to study everything that can affect the securities value, including macroeconomic factors and individually specific factors. So here we consider the economic factors, industry factors and company. When I say company, it is individual. When I say macro, it is the economy or out of the economy also. So we consider all the factors. And it is composed of 3 layers, as I told you in the beginning itself: economic, industry and the company. This I will be showing you in the form of a diagram. This chart shows that there are 3 layer analysis. One is first company analysis, industry analysis, economic analysis. See, I just circled it. It is at small level, the next higher level, the next broad level. So this will be done in different stages, and we are going to study today in this session about economic analysis. So in the next session about industry, then about company. So we will be studying in depth about all the 3 concepts. Economic analysis. So here, as I told you, economic analysis is an analysis, examination or detailed investigation about the economy in which the company is there, the industry is surviving. So basically the performance of a company depends on the performance of the economy. If there is inflation in the economy, the industry and companies also will be in a prosperous condition. If there is recession, even the industry and company will be in the recession. So that is the nature, what happens generally with the economy. So even there is inflation, people also will have the same living standard. If there is recession, people also will have the same living standard. And this economic analysis can be studied through different factors which we have. So the different factors involved in this economic analysis, or to understand economic analysis, we go through different concepts. The various concepts are, so here we have the key economic variables which we are going to use for understanding the economic analysis. So here the first and the basic factor is GNP or GDP. That is, GDP is nothing but gross domestic product or gross national product. What is this gross domestic product? It refers to the aggregate value of goods and services produced in the economy. So it is nothing but the aggregate value of goods and services produced in the economy during a specified period of time. So here it reflects the overall performance of the economy and its growth rate. The GDP will tell you what is the overall growth of the economy. So what happens if GDP rate is higher? We have the stock market is very more favorable. If the GDP rate is lower, the stock market is not favorable, it is unfavorable. So same way we have the next one, savings and investment. So the savings and investments, the savings are distributed over various investment avenues. So generally when people invest, they will invest in debentures, shares, deposits, mutual funds, real estates, bullion market, different money market securities, different capital market securities. So that has a great influence on the stock market, and as stock market is a channel which makes the savings available to the companies. So here that is reflected through the savings and investment. The next one is inflation. As we discussed, the basic economic variable, if there is inflation in the economy, even companies will have inflation. If there is recession in the economy, even companies will have same recession. So the investor has to evaluate the inflation rates prevailing in the economy currently, and what is the inflation rate which is going to prevail in the future. So what happens when there is inflation? The worth of the return or the value of the returns will be reduced. So here it's nothing but the present value of that returns will be reduced. So while investing, the investor has to take into consideration the inflation rate, and based on that he has to take the investment decision. The next basic factor what we have is agriculture. As we all know, India is one of the agriculturist economy. It is a major part of Indian economy, and some of the companies are using agricultural raw material as inputs, and some others will supply inputs to the agriculture, definitely which will have an impact on the agricultural production. So when agricultural production increase or decrease, it has an impact on the industrial production and corporate performance, because it supplies lot of commodities to industries, and in turn industries will also supply a lot of products or commodities to the agriculture. So this is one of the factors which will tell about the prosperity of the economy, or the prospectus with which you can just invest in the economy, in that particular economy securities. The next one is the prevailing interest rates in the economy. So this has an influence on the economy, and we use it for evaluating the impact on the performance and profitability of the companies. So what generally happens when there is a change in the interest rate, automatically that will have an impact on the business and in turn on the economy. So that has to be considered by the investors while investing. Say for example, the rate of interest charged by the government or given by the government on different bonds and securities keeps on changing with change in the monetary policy of the economy or the monetary policy of the government. So we generally see that when the interest rates are high, the result will be higher cost of production, and which will lead to lower profitability and lower demand. So that generally happens. So that has to be considered by the investor. He has to evaluate and then he has to invest. The next one is government revenue, expenditure and deficit. This also has an impact on the investor. So what happens here? The expenditure stimulates demand and creates job. That is the expenditure of the government. So the excess of expenditure over revenue is a deficit, and deficit financing increases inflation. So here what the revenue government is getting, what the expenditure, and what is the deficit. Revenue is nothing but the income what it gets, expenditure is the amount what it has invested, spent. Deficit is nothing but if expenditure is more than revenue, we will get a deficit. When there is a deficit, there will be an inflation. This has to be considered by the investor, and he has to evaluate and he has to invest based on that. And inflation is not a right situation for an investor to invest. If there is inflation, it's better he avoids the investment, and moreover it's better to go for appropriate security so that it can give him a constant and stable return. The next important factor is political stability. So for any economy to have a balanced growth, there must be a stable political environment. The government must be stable. So what happens to have prosperity in the economy? There must be long-term economic policies, and these long-term economic policies will lead to industrial growth, and that will lead to prosperity in the economy, and that will be there will be a stable environment for the investor to invest. So the basic factor here is political stability. There must be a stable government. There should not be changes in the government. And what happens sometimes, if the government follows the economic policy, what they frame will be changed based on the new government. So all these factors has to be considered by the investor. So the more political stable government economies are more preferable for investment. The next one is infrastructure. So this is a base for the development of any economy. So the industry needs all the infrastructure: electricity, transportation, communication, banking, financial institutions, everything. So a good infrastructure is a symptom of development, whereas bad infrastructure will lead to low efficiency, low productivity and wastage. So infrastructure is one of the important variable which tells the situation of the economy, which analyzes the economy. So an investor has to focus on that point also. The next one is monsoon. as we all know, India is an agricultural economy, and many times what happens, the agriculture depends on monsoon. So the adequacy of monsoon ensures the success of the agricultural activities in India, and opposite, vice versa. Hence it becomes very important matter for the investor to understand the monsoon condition, and of course that will have an impact on the economic analysis. And as we all know, every session will have multiple choice questions. Let us go for that, students. Hope you have understood this, all the key factors in economic variables. So the first one, security analysis, is most concerned with analysis of the overall securities market and its direction, valuation analysis of individual securities, purchasing securities at the best price, determination of the investor required return, analysis of the overall securities market and its direction. Okay, students, the second one is settlement cycle in Bombay Stock Exchange and National Stock Exchange are 10 days, 8 days, 7 days, 15 days. We have 7 days. The next one is carry forward transactions are permitted for a period of 70 days, 75, 80, 90. It is 90 days. Which of the following is used in economic analysis? Gross GDP, surveys, labor cost, diffusion. Just now we studied, it is GDP. Weak form of market efficiency implies that the expected return on any security is zero. Incorporates semi-strong form efficiency, involves price and volume information, is compatible with technical analysis, involves price and volume information. So students, after this we have the references, and you can just go through this, and students, I'll see you in the next session. Thank you.